Okay, right. So guys, a very good afternoon to all of you. We'll just stay for a few minutes, like 3, just to see if others are joining, and then we'll start. Okay. Okay, right. So guys, as we discussed last week, today we will be guys focusing on uh, preparing some cash flow statements under the indirect method. And then guys, on the other hand, we will try to look at what you can say, a few section A questions. Maybe, we can try the mock exam that's available over here. So that will be guys the plan for today. Okay. Okay. Let's start this question guys over here. Number 1. The following information relates to Geofrost Corporation, a limited liability company. So guys, I instructed you all last week, before you come for today's class, if possible, just watch a particular recording which is available in the PPIM YouTube channel, where I'm explaining the basics of cash flow and I'm discussing some exam kit questions, so that will give us time for us to practice more questions in class, because that's the reason why I requested you all to cover that area, the basics of cash flow, and come over here. Right, okay. Now guys, let's have a look at this question then. Number 1. So the following information relates to Geofrost, a limited liability company for the year ended 31st of October 2007. Extracts from the statement of profit or loss for the year ended 31st of October 2007 is given. So they have guys given you profit before tax, less taxation, profit for the year. Then they have given you an SOFP with 2 types of balances. So 2006 will become the opening balance. 2007 will become the closing balance. So 2 types of balances are given. Okay, then guys, going down. So they have given a lot of balances for us. Okay. And then guys, over here, they are telling, right, additional information. So additional information, guys, point number 1, depreciation expense was 4,658,000. Right. So guys, you should understand depreciation is considered as a non-cash item. Okay. When you do a cash flow lesson, guys, we only focus on cash inflows and outflows. No. So this depreciation, what you see here over on the screen, we consider this as a non-cash item. A non-cash item in the sense, guys, money doesn't come in, nor does it go out. So normally depreciation, what we have to do, so if you have learned cash flow previously, or maybe what's that recording which I had requested you all to do, right? When you have depreciation, all what you need to do is you need to remember, see guys, actually FA cash flows are so easy. They will tell you exactly what to find. You should see guys, FA cash flows are not difficult. Once you go through the format, guys, over here, you will easily be able to understand what and what is needed. Right. So it's just a matter about you going through the format and trying to pick up the numbers. That's all. Okay. Unlike our advanced level, cash flows are not that difficult because they will tell you these are things we want. So you search that and quickly copy it. Okay. So for an example, guys, over here, let me go up one more time. Right. Depreciation, always guys, remember depreciation will come under adjustments. Right. Now, guys, remember one more thing. Depreciation is a expense. So normally under adjustments, what do we do? Any expense, we reverse it. Now, normally, guys, in accounting expenses, what do? We normally subtract. Okay. Normally, depreciation is an expense. We subtract depreciation from profits. So since the money has not gone out, we want to reverse this. So therefore, guys, once you reverse, what will happen? Depreciation will be added. So let me mark it over here. 4,658,000 rupees. That's our depreciation. So remember, guys, depreciation, we should normally add in the statement of cash flow. And also, guys, one more thing. What is this question that I'm doing? Just go to specimen.accaglobal.com, guys. In that, there will be 2 options called, you can do this question with me right now. Okay, right. What you should do, guys, just go to this particular page over here. Let me show you. So just type in ACCA specimen FA exam. So once you type that one, guys, you will reach this one. Let me just show you. ACCA specimen exam for FA. Right. So guys, once you click on that one, just go to here, CBE exam and MTQs. So click on this one, guys, financial accounting, extra MTQs. So that only, guys, I'm practicing here. So you can do it with me itself. Done. Anyway, so guys, coming back to the question. So depreciation is always added, right? 4,658,000. Right. Now, guys, second thing they are telling you, asset with a carrying amount of 1,974,000 was disposed for 720,000. Okay. An asset with a carrying amount of 1,794,000 was disposed at a profit. So normally, guys, remember the moment that you see this, and always this will definitely happen in cash flow questions. There is no doubt. Disposal account. So when an organization sells something, we should definitely open an account called guys disposal. So for cash flow lesson, we can guarantee that disposal account will always come in our exam. So therefore, guys, now what we are going to do, we are now going to prepare a disposal account. Right. 1T account called disposal. So always, guys, remember, in order to avoid mistakes, as soon as you open a disposal account, also open for yourself an account called property, plant, and equipment at carrying value. So always, guys, understand in the cash flow lesson, right? The PPE account will always be held at carrying value. Understood? The PPE account, guys, will always be held at carrying value. Right. The reason, guys, why the PPE account, if the PPE account is held at carrying value, there is only one small thing or two small things that you should remember. Okay, now, normally, guys, from A levels, the PPE account is always held at cost. Now, moving on to FA, the PPE account is always held at carrying value. So if the PPE account is held at carrying value, as a student, you just need to know two important things. Right. Number one, depreciation. Okay. Remember, guys, any depreciation, the double entry will be depreciation account debit, PPE account will become credit. Now, normally in accounting, what's the double entry for depreciation? Depreciation debit, provision for depreciation credit. But in a cash flow, if the PPE is held at carrying value, without crediting provision for depreciation account, we are going to credit the PPE account directly. That's the first thing that you should know if the asset is held at carrying value. Understood, guys? If the PPE account is held at carrying value, rule number one, make sure your depreciation is credited to the PPE account. So we had a depreciation now, guys. So I'm going to now credit that to my PPE account over here and show it to you. Depreciation 4,568,000 without the zeros. Now, what's the second thing that you should remember if the PPE is held at carrying value? Second thing is, guys, during disposal. Now, normally when you sell an asset, right, we call it disposal. So during disposal, guys, what happens is that the double entry will be disposal account will become debit, PPE account will become credit. And remember, you should mark the carrying value and show. Okay, you should mark what value? The carrying value. Once again, guys, remember, under traditional accounting, during a disposal, what do we do? Step one, remove the cost. Step two, remove what? Provision. Okay. Under traditional accounting, when you sell an asset, step number one, remove the cost. Step number two, remove the provision. But if the account is held at carrying value, removing the cost and removing the provision separately doesn't take place. Without removing cost separately and provision separately, both of them will be combined as one entry called in disposal, remove the carrying value. That is if the account is held at carrying value. Understood? Was it confusing? One more time, because if I am to explain like this, usually when you dispose, we have been taught that step number one is eliminate the cost of the asset. Step number two is eliminate the provision. These two will now be combined as remove the carrying value if the asset is held at carrying value. Okay. During a disposal, the step number one will be, right, eliminate the carrying value of the asset. This will become, guys, the first step. Remove the carrying value of the asset. Rather than removing cost and provision separately, we will be removing the carrying value directly. So again, guys, remember, in cash flow questions, definitely your PPE will be held at carrying value, no doubt. If the PPE is held at carrying value, these are the two important changes you need to study. First one, depreciation is credited to the PPE account. And during a disposal, step number 1 will be eliminate the carrying value directly rather than eliminating cost and provision separately. We directly go with eliminate the carrying value. So when you eliminate the carrying value, guys, double entries, disposal, debit, PPE, credit. Now, guys, see, asset with a carrying amount of 1974 was sold. So now remove the double entry. So therefore, guys, what will happen? Disposal account will become debit. Okay, PPE 1978. And PPE account will become credit. Disposal, right? 1978. So these are the two things, guys, what you need to remember during a PPE account carrying value, right? Can you guys little bit check and see, guys, are you okay with what I have explained so far, guys, for you? Okay, right. Then, guys, let's move to the next adjustment. Were disposed at a profit of 720,000. Okay. Asset with a carrying amount of 1,794,000 were disposed at a profit of 720. So normally, guys, when you sell, and if it becomes a profit, what should happen in your PPE account? You need to, guys, mark that on the debit side and show profit on disposal 720,000. Like this, you have to mark. All good? Right. So far, guys, I just did 2 adjustments, and this is what I did. Depreciation, I took it to adjustments. Under adjustments, expenses are always reversed. So expenses we add. Then depreciation, double entry, depreciation debit, no need to do, PPE account credit. Then asset with a carrying amount was disposed. So disposal debit, PPE credit. And finally, guys, we dispose it using a profit. So profit should come to the debit side of the disposal. Sorry, guys, I made a mistake. Profit should come to the debit side of the disposal account. Now, this is the disposal profit. Now, I mistakenly marked it in my PPE account. Usually, guys, disposal profit should come to the disposal account. So please make sure, guys, from here, you have transferred it up over here. And one more thing, guys, remember, profit on disposal is again part of adjustments. Can you see here? Profit on disposal. So you mark that one. How much? 700. Okay, here, guys, small mistake. I had to remove the 3 zeros. The reason why I had to remove 3 zeros is, guys, here, can you see? Right. So anyway, coming back to, guys, what I was explaining. Profit on disposal was how much? 720. Guys, now under adjustments, you have to reverse. Now, normally profit is what? Income. We add. So here, guys, what we should do, we should subtract and show our profit on disposal. So from these 2 adjustments, this is the maximum possible things that we can do. Right? Can you guys check and let me know, guys? Any doubts that you have, right? Anything that you want me to clarify, guys? Check and let me know, please. Okay, so guys, seems like all are okay. So I'll just move to the up part of the question. So guys, always in your exam, once you are done with your adjustments, start the question from the very beginning. Okay, so let's start. First thing we have, guys, profit before tax, 15 million. So normally, guys, what we should do if there is profit before tax, right? That is the starting part of the cash flow statement. So those who have already done cash flow statements, guys, you know, no cash flow statements always start with what? Profit before tax. So let's mark that and show, guys, over here. Let's select it. Profit after tax, before tax. It has to be before tax. How much? 15 million rupees or 15. So guys, I think if you mark 15 is okay because it was 15,000 with the zero, without the zeros. Let me, guys, a little bit go up and check and see. It's 15,000 with the zeros, no, guys. So therefore, we should mark that properly. 15,000. Done. Okay, then guys, next part, let's go back to the question quickly. Right. So next question, guys, what does it say? Right. Less taxation. So normally, guys, remember from my experience, what I can tell is that normally for tax, we have to always open an account. Right. So normally for taxation, there is an account that we always open. Why we have to open a tax account? Because we have to understand how much tax was paid. Right. So for that, we normally, guys, open up a tax account in our cash flow question. So let me, guys, draw that one over here and keep tax account. Right. Now, guys, see, it says less tax. That means there is an expense. So normally, if tax is an expense, in the profit and loss account, it becomes debit. Are you clear with that part? Once again, guys, if something is an expense, we say that it's debited to the profit and loss account. Because of that reason, in my tax account, this should appear on the credit side as income statement, 4,350. All good? Once again, guys, see, tax is less, no, meaning it's an expense. So if you don't know, if something is an expense in the profit and loss, it's debited. Because of that, in your tax account, it's supposed to be marked on the credit side. That's it. Next one, guys, we have profit for the year, which is also called profit after taxation. Now, guys, normally, profit after tax is needed for one occasion. Okay. Profit for the year or profit after tax, guys, is normally needed in a situation where, like this, you go down and check and see, guys, in your format. That means you go to the requirement of the question. Check and see over there, is there something called dividends paid? Okay, so once again, guys, if you didn't understand what's happening, guys, see, now they have given us profit for the year, no, profit after tax. Now we need to check and see whether that profit is correct or wrong. Or do we need that profit or not? So normally, guys, profit after tax is needed if in your financing activity, there is something called dividends paid. If a dividend paid is there, then you should use the profit after tax inside your retained earnings account and find the answer. Understood? In your financing activity, if there is something called what? Dividends paid, then you should take that profit, prepare a retained earnings account, and from the retained earning account only, you should find dividends paid. But in my question, do I have a dividends paid? No. Financing activity doesn't show dividends paid. So therefore, guys, remember, we don't need that profit for the year. It's irrelevant for my paper. Right, done. Again, guys, going back to the question. Right. So guys, from the profit and loss account, now I have completed everything. Nothing more to discuss, right? So I've done everything. Right. Let's go down, guys, now over here. Now, guys, you should not make a mistake in your exam. Understood, guys? Don't make a mistake. 2006 to 2007, right? Always, guys, make sure that you decide your brought forward and carry it down correctly. So here, guys, it's very obvious. 2006 will become brought forward, while 2007, guys, will become carried down. Done. Okay, let's start. Non-current assets. Non-current assets means, guys, this one, property, plant, and equipment. So since we are opening an account, you should consider these two. So, guys, always remember, if you don't know, asset. If something is an asset, brought forward is debit, carried down is credit. Okay. If something is an asset, brought forward is debit, carried down is credit. And if something is a liability, or if something is an equity, it swaps. Okay. Meaning brought forward is credit, carried down is debit, opposite side. Let's start, guys. Non-current asset is an asset. So therefore, guys, brought forward will go to the debit side, which is 26,574. And carried down, guys, will come to the credit side, which is 44,282. Done. Okay. So because I'm opening in your exam, definitely you have to open. So therefore, guys, brought forward debit and carried down is credit. Right. Now, guys, let's move to the next part. Current assets inventory. Now, guys, remember inventory, trade receivable, and then, guys, down when we go, there is something called trade payable. Right. Let me show you that part also. Right. So, wait. This is carried down and this is brought forward. So you should know that, guys, always inventory, trade receivable, and trade payable are always, guys, part of what topic in a cash flow statement? We always consider it, guys, to be what topic? It's always inventory, trade receivable, and trade payable. So, guys, like we discussed, those are, guys, always part of what in the cash flow statement, guys. Those are always part of the working capital changes. Understood, guys? Inventory, trade receivable, trade payable are always part of the working capital changes. Okay, now, guys, I want you to do a small work for me. Can you quickly compare now, guys, from here to here, from here to here, and also here to here? And, guys, can you keep your answers? And also, guys, listen, don't make a mistake in your exam. For working capital changes, when you compare, you should always go brought forward to carry it down. Is that clear? When you take your working capital changes, guys, you have to always go brought forward to carry it down. That's how the working capital changes, guys, should always be done. Brought forward to carry it down, not the other side. From start to end only, you have to go. Right now, guys, can you use your calculator and now find the differences? Brought forward to carry it down, brought forward to carry it down, and brought forward to carry it down. And, guys, can you quickly decide whether it's plus or minus first? Right. Let's just spare me a minute, okay? Okay, right. So, guys, were you all able to do the working capital changes? So, working capital changes, guys, what you should do is this. See, guys, compare here to here. Find the difference, okay? So, guys, brought forward is how much over here? Brought forward is 9,635. Subtract this, minus 3,560. So, therefore, guys, the answer is going to be 6,075. Done. Okay, then, guys, over here, receivable is there, no, guys? So that also, guys, can you find the difference between these two? 4,542 minus 6,405. Right, 1,863. Next one, guys, over here, trade payable, guys. The answer is going to be, find the difference, 4,364 minus 7,562. Done. So I'm getting, guys, 3,198. Okay. Now, guys, this is what you should decide now in the paper. What happened? Have they increased or have they decreased? So guys, remember, there's a short theory that says current assets. When the inventory levels are increasing, when the trade receivable level is increasing, money is going out. It's a reduction of cash. Okay. Once again, if the inventory level has gone up, or if the trade receivable level has gone up, it means that money also, guys, has gone out. So when current assets are increasing, okay, I'll just make a note over here so that you can see. When current assets are increasing, guys, we say it's a cash outflow. Money goes out. The reason is this. If inventory level is increasing, that means we are buying inventory. So when you buy, money goes out. If trade receivables are increasing, it means that they have borrowed money from us. So for us, money goes out. So just remember, when current assets are increasing, money is going out. Likewise, guys, remember, when current assets are reducing, then money is coming in. Why? When current asset reduce, if inventory is reducing, that means we have sold inventory. Then money comes in. If the customers are reducing, that means they have settled us. So when they settle us, guys, money comes in once again. Right. So remember, guys, when current assets are going up, money goes out. When current assets are going down, money comes in. And for current liability, it's the opposite. Right. Now, guys, see what happened here to here. Look at this part, guys. Inventory from 9,000 went to 3,000. That means it has gone down. Do you understand? Any doubts? Please ask me. Receivable brought forward is 4,000. Carried down is 6,000. It has gone up. Right. Then, guys, on the other hand, trade payable 4,000 became 7,000. That means it has gone up. So like this, first you should decide the difference, then decide for yourself, have the level increased or has the level decreased. Now, guys, what we will do, let's start now marking these numbers into our format. Okay, so let's go down now. Right, now let's start, guys. Start marking it over here. See, now inventory, guys, what happened? 6075. So let me mark that 6075. Right. Receivable, guys, 1863. Then, guys, payable 3198. So these are the three answers. Now, guys, what happened to inventory? Inventory has gone down. Correct or wrong? So here, guys, now look at the note. Inventory is a current assets. When current assets are decreasing, it's positive. Answer is money is coming. So add. Right. Then, guys, receivable has increased. No? So when current assets is increasing, answer is minus. Money goes out. Then subtract. Payable. When the trade payable, guys, is increasing, look at this. Trade payable is increasing. So when current assets is increasing, we are telling minus. No, current liability opposite. When current liability is increasing, answer is plus. So therefore, guys, let me mark it over here. Add. This is how, guys, you have to do your working capital changes. First, find the difference. Then see whether it has increased or decreased when compared to the brought forward. Then, you apply your theory. Current assets works this way. Current liability will work in the opposite way. So if you want to clarify, guys, any doubts, please do ask me. Right. So I will erase this one for the time being. Right. Even this double entry, guys, I'm erasing from the screen. Okay. Right. Now, guys, let's go back to the question, guys, once again. Okay, so guys, we just finished off inventory. We've just finished off receivables. Now cash. Okay, now guys, please remember in your exam, this is what you have got to do. The moment you get cash, you should check your paper and see, is there something called bank overdraft? Now here, guys, can you see there is something called a bank overdraft? Done. Okay, so always, guys, remember the moment you touch the cash part of a question, double check the question and see, is there something called what? Bank overdraft. See whether there is something called bank overdraft. Remember, guys, cash will always come in the last part of the cash flow statement format. Now, those who know the cash flow statement format, guys, at the end, what do we have? Cash and cash equivalent at the beginning. Cash and cash equivalent at the end. For that only, we need the cash balance. Equivalent at the beginning, equivalent at the end. Are you clear with that part? Right. So now, guys, this is what you have got to do. Now, cash Starting is 1063. So always, guys, I said, if there is cash, what you should do, then check for bank overdraft. If there is an overdraft, you should subtract it, because bank overdraft is considered as negative cash. So if there is a bank overdraft, you have to subtract. Same with this. From 2045 cash ending balance, if there is an overdraft, guys, you have to subtract. Right now, guys, can you subtract and get the two answers fast? So 1063 minus 429. So the answer is how much, guys? 634. Then, guys, on the other hand, 2045 subtract 1230. How much will be the answer, guys? 2045 minus 1230. Answer is 850. So opening cash minus opening bank overdraft, equivalent is 634. Closing cash minus closing overdraft, equivalent is 850. Now, where to mark these two answers? Like this. Let me show you. Take your format, go to the very last two lines. Here, guys. Cash and cash equivalent at beginning, cash and cash equivalent at end. Now, guys, look at this carefully. This was the beginning answer, 634. Copy it here. At the end, answer is 815. So you mark this over here and show. So this is how, guys, you have to do cash and cash equivalent. So once again, guys, remember, in your paper, when you get cash, search for what? Bank overdraft. If there is subtract, if it's brought forward, copy it as cash and cash equivalent at the beginning. If it's carried down, copy it as cash and cash equivalent at the end. So this is how, guys, that is supposed to be done. Right. Okay. Then, guys, let's move to the next part then of the paper. Let's see. Okay. Now, guys, over here, now we have done cash. Now let's move to next part, equity. Ordinary share from here to here has increased. Okay, right. Now, guys, listen. In the FA level, ordinary share will never reduce. Okay. At the foundation level, guys, ordinary share will only increase. So if the ordinary shares are increasing, there is only one possible answer in our paper. What's that called? Issue of shares. Okay, please remember, guys, at the FA level, ordinary shares can only go up. If it goes up, what's the only solution? We call it as issue of shares. So issuing share is a financing activity. So first of all, guys, from here to here, can you quickly see what's the difference, guys, that we have? 17,496 minus 19,365. We have a difference of 1,869. So 1,869 is, guys, what? Issuing of share. Issuing of share is a financing activity. Can you see here, guys? 1,869. Okay. Now, guys, remember, when you issue share, what happens? Money comes in. So therefore, the sign has to be add. Okay. When you issue shares, what happens? Money comes in. One more thing, guys. Now, if you're confused, should we add or should we subtract or like that? If you're confused in your cash flow, guys, listen. Anything that after inventory. Now, normally adjustments. Adjustments are the only thing where we apply the opposite. Meaning expenses we add, incomes we subtract. That's the only opposite. From inventory, from this point onwards, everything that you see, your focus should be, is money coming in or going out? So when you issue shares, you get money. That's why, guys, the answer was add for that particular transaction. Right. Again, going back to, guys, the top part, going back to the question paper. Okay, retained earnings. Guys, like I said, retained earnings must only be used. Wait, guys, I think something got erased. Okay. So like I said, guys, retained earnings must only be used in a cash flow if there is a what? Dividend paid. Now, guys, always in your exam, you go to the format and see in financing activity, is there something called dividends paid? If dividends paid, they are not asking, you don't need to worry about the retained earning. Retained earning must only be worried and looked at in a situation where the organization has paid dividends. Unless otherwise, you don't need to focus on the retained earnings. Only when there is what? Dividends paid. Good. Okay, next one. Loan. Okay, now guys, listen. Loan, also you compare, like how I did for the share capital, guys. Loan also what you do, compare here to here. Now, guys, remember, guys, when it comes to loans, there are two possible things. One, the loan can go up. If the loan goes up, we have taken a loan, money comes in, positive. Or the loan can reduce, like this here, 10,300 became 8,000. It can reduce. If the loans are reducing, then we have settled a loan, financing activity. When you settle a loan, money comes in. Money goes out. When you settle a loan, guys, cash outflow. So remember, guys, for loans, there can be two things in FA. If it's increasing, obtaining a loan, financing activity positive. If the loans are reducing, then settlement of loan, financing activity negative. So guys, from here to here now, what's the difference? 10,300 to 8,000, there's a difference of 2,300. So let's mark that and show. 2,300 is here, guys, repayment of loan. Mark that. Because money is going out, subtract negative. Done. Right, again, guys, let's go up. Right, guys, bank overdraft, we already finished now. We took now for cash and cash equivalent. Right, next one, guys, trade payable. That also we already finished, right? Can remember for which part? Working capital changes. We're done with that. Last one, guys, taxation. Guys, remember, tax is a liability. Because it's a liability and we have a tax account, brought forward will come to the credit side, 2760. Carried down will come to the debit side, 3020. Okay. So you open the tax account, brought forward will come to the credit side, carried down will come to the debit side. That's it. Okay. Now, guys, we are done with everything now. All the adjustments, every figure, line by line, we looked at it. Now, once you're done with the line by line figures, guys, now what you should do? Now, guys, you need to start closing your accounts one by one. Okay. Now, guys, you have opened 3 accounts now on the screen. Can you see here? Now what you should do, the 3 accounts that we open, you should close. Right. Now, guys, can you use your calculator? Close the accounts for me and start finding these answers, guys. Cash. Close this account and find cash. What is this account name? PPE at carrying value. Then, guys, can you close the tax account and also, guys, find cash for me faster? Right. Please close these accounts now and find cash, guys. This account, and this account. Close all of them down and find cash, please. Let's start doing that part, guys, quickly. Uh, Wait, and have I made a mistake? Wait. Yes, thank you. Yes, you're correct. Yeah, guys, over here, I had made a small typing error. Here, guys, asset with a carrying amount of 1974. So over here, guys, I have written 1978 actually. Okay, so over here, guys, there has to be a small change. This one, guys, should not be 1978. It has to be, guys, 1974. Okay. Here, guys, it should be disposal 1974. Earlier, guys, I wrote it as 1978. No, right. Over here also, guys, it has to be 1974 instead. And the depreciation also, guys, is there a small typing error? Yeah. Depreciation also, guys, small error. It has to be 4658. Thank you, guys. Okay. It has to be 4658 instead of 4568. I made two small typing mistakes. Please correct that one, guys. It has to be depreciation 4658. Okay, done. Right. Now, guys, let's close the account and see what are the answers that we are getting. Okay, over here, guys, 1974 plus 720. Then the answer, guys, will be 2694. Next one, guys, over here, 2694. And then over here, so here also, guys, answer will be 2694. Okay, now, guys, what you do the PPE account also. So PPE account, guys, when you close, the answer will come on this side, cash. Okay. So how to find that answer, guys? So first what you do, guys, first you add these three and see. These three. So once you add those, your answer will be 4658 plus 1974 plus 44282. Then the answer, guys, will be 50,914. Bring the same thing to this side. Then, guys, 50,914 minus 26,574. Then the answer, guys, will be 24,340. Okay. Then, guys, don't forget tax account also, guys, we have to close from this side. Tax account, guys, when you close the answer, first add these two. Right. Then we are getting 4090. No, right. Thank you. Right. So over here, guys, tax account, when we close the answer is coming as, guys, 4090. Okay. Now, guys, see, once you close the account, you all got three answers, no? Now, these three answers, you need to mark it and show now in your cash flow statement. Right. Now, I'll teach you how to mark this. First, let's start with tax. So normally, guys, tax is something that comes here, operating activity, right? Mark this one, guys, 4090. Now, guys, see, this is tax paid. Paid means cash outflow. Money goes out. So therefore, it has to be subtract. Okay. It will be cash outflow. Done. Then, guys, disposal. Guys, remember, disposal and PPE account, if there is cash, it should always come under investing activity. Okay. And actually, guys, you don't have to think that much also, guys, because easily you will find these here, guys. See, look at this one. Disposal means what? The money that we got after selling. So here, guys, can you see? Proceeds from the sale of non-current asset. We got 2694. Meaning, guys, when you sell, money comes in. So therefore, it has to be plus, add. Then on the other hand, here this one, guys, PPE debit side. For those who don't know, in the debit side, if the answer is coming as cash, it can only mean one thing. We bought new properties. Here, guys, payment to acquire new non-current assets. So when you buy new non-current asset, it will come on the debit side. Answer is 24,340. So this is the payment now, guys. Payment means money goes out. So therefore, it has to be subtract. Okay. Now, guys, remember from this answer, everything that I marked. Now, guys, let's start finding the final answers. Now, all of these are filled. These two are also done. Right. These two are also done. Right. Now, guys, how to find this answer? Right. Guys, listen, normally in accounting, this one plus this one. Okay. Normally in accounting, this answer plus this answer is equal to this last answer. That's how it normally works. Even in the exam kit, when you see the questions, it's in the same nature, guys. That means always this one plus this one is equal to this. Now they are asking you to find this answer. How to find this answer? You need to work backwards. Okay. If you want to find this particular answer, guys, what you need to do, you need to go backwards. So guys, going backwards means like this. You take 815 in your calculator, 815. Now guys, see, we normally add these two. No? So when you're going backwards, you have to subtract this answer. So 815 minus 634. So when you subtract 634, then guys, the answer is 181. Copy that answer over here. So it's 181 positive. Positive means, guys, we have to add, or maybe it's an inflow. Done. So all the possible boxes I have filled. And here, guys, can you see question number 1, 15 out of 15. The complete mark we have gained. So this is how, guys, normally we do a cash flow statement in FA. Okay. And also, guys, remember, if you want to like see more questions or anything like that, guys, what I had asked students last week to do was, so if they can do that groundwork and come, it would be much easier. So what I requested students to do is, guys, something like this: to go to the PPIM, the YouTube channel, right? So in that one, guys, 3 months ago, you will find the revision game plan. Watch, guys, video number 1 for FA. Okay. So few months ago, I did a same like this. I did a revision campaign, guys, for another batch also. So there I started off for them by explaining the cash flow lesson. This session, I put more focus on adjustments to financial statements, consolidated SOFP, consolidated income statement. I put more focus on that. And I also did one cash flow. So if you want to like practice more cash flow questions from the exam kit, or maybe to cover the basics, you can, guys, just go to their YouTube channel. 3 months ago, revision game plan FA video number 1. I'm explaining the basics of cash flow, including what you can say, guys, practicing, I think 2 or 3 exam kit questions also I have done. So if you can go through, you will have like a thorough understanding of the cash flow statement. So now, guys, what we will do, cash flow is now enough. We will move on to another part. We will now try to do questions which covers like other aspects of the syllabus. Okay, so we can start that question now. So this question, guys, over here, I did with you all last week. So I will exit. So guys, now we have revised the 4 major parts of syllabus: financial statements, consolidated SOFP, consolidated income statement, and cash flow. We did a small question. For more questions, guys, please check on that one. And if you have any doubts, you can ask me. Right. Now, guys, what we will do is, guys, we will try to do some questions over here, which will cover the other parts of the syllabus where we can do a small recap. Right. Little bit check on this question, guys, over here. So we'll spend 2 minutes per question and we'll try to find the answers for these. Wait, guys, little bit, let me check and see, do I have the soft copy of this particular question? Because I think I have a PDF version. So if I share the PDF version, you can do more questions in one go. That's why. Just to see if the same question is there. Wait. Mm, Okay, in that case, we'll just try this one because here, guys, you will be able to find the answers also in the platform itself. Okay, just go ahead, guys, with this question over here. So they're asking which equation will give the profit. So this question, guys, is coming from this chapter called incomplete records. So from there only, guys, this particular question is being tested. Just try and see, guys, whether you're able to find the answer. I'll explain after that. I'll give you a minute time, let's say. So first of all, guys, you in your mind, you decide, okay, what's the correct equation for profit that we normally use. Then based on that one, guys, you should be able to find the answer. Very good. That's the correct one. Good. Very good, guys. So you all got the answer now, guys. So first one should be the correct answer. There you go. Right. Let's move to the next question, guys, then. So they're asking what is the meaning of the word impressed. So impressed is what we call the float. Okay. So they're asking the meaning of that one. Wait, guys, let me check that answer. Okay, right. Now, guess that since you have now sent me your answer, which of the following explains the impress system of the petty cash? So, usually, guys, impressed is also known as the float, meaning that's a system where the petty cashier cannot have more than a given amount during the time period. That means, for an example, let's say if we decide the maximum that he's going to have is 100. So that is what we call, guys, the float. So over here, I think, wait, guys, let me just put this answer and see. No, this answer is wrong. Okay, so therefore, guys, based on this one, I thought the answer would have been 2, but the answer is then in that case, it has to be 1, no? Yeah, I think, yeah. Yeah. So Avindi's answer is correct over there. The exact amount of expenditure to be reimbursed at intervals to maintain. So I thought the answer would have been B actually, but no, the answer is A. The reason why the third option is wrong is because regular equal amounts of cash are transferred into petty cash at intervals. Now usually what happens is that in a petty cash book, normally at the end of the month, we give back the amount what we spent. Now, let's say in the first month, if we had spent 300, we would give 300. On the second month, if they had spent 200, we will give 200. So meaning at the end of the every month, the main cashier will give for the petty cashier, not the same amount. He will give the amount what he spent. So the amount that you're spending is always variable. No, it changes. Because of that reason only, the answer is not the third one and it's first one. Okay, we don't give regular amounts. We always give what we spent, which can be always changing or variable. Okay, right. Then guys, let's move to the next one. Even I thought the answer was second one actually. Okay. Third one, guys, over here. Which of the following is true about limited liability companies? So they're asking the advantages of qualities of a limited liability company. So limited liability company means, guys, a company where the shareholders' liability is limited up to their investment, meaning they don't have to bring personal assets in order to settle any kind of debt. Okay. So that's what we call, guys, over here, limited liability company. Right. So guys, I think the correct answer has to be, I think it has to be the first one. No, it's again wrong. Why is that? Wait, the company exposure to debt and liability is limited. Limited liability means, wait, the company exposure to debt and liability, or is it the shareholders? Okay, so the option that I thought was incorrect. Okay. So the correct answer, I think one student sent me the answer over there as 2 and 3. Okay, so maybe I have misread over here. So it says the company exposure to debt and liability is limited. So normally, guys, in a limited liability company, what happens is that the shareholders' liability is limited. If I invest 1 million and if my company goes bankrupt, my liability is limited only up to the extent which I have invested. So over here, guys, I think the reason why number 1 is wrong is because company exposure to debt and liability is limited, not the company exposure. The shareholders' exposure to debt and liability is limited up to his investment. Company can borrow any given amount, but a shareholder's risk is only limited up to his particular investment. Because of that only, guys, 1 is incorrect. Quite tricky. Right. Let's try this question, guys, over here. Now, over here, what they're telling is that what figure should appear in any statement of profit and loss for purchasers? Okay. Now, guys, again, this particular chapter is also coming from the lesson. Income question is also coming from the chapter, guys, incomplete record. So incomplete record in the sense like this. Now, usually, how do we find purchasers in accounting? Purchasers is equal to, guys, cash purchasers plus credit purchasers. Okay. So cash purchasers, normally when you read your question, they will give. If it's not there, it's 0. So check the question carefully. If you want to find credit purchasers, guys, what you should do in accounting is you have to open up a trade payable control account. So guys, if you do open up a trade payable control account, then you will be able to find the answer for credit purchasers. This is what you should do if you want to find the answer for credit purchase. Done. Okay. Now, guys, can little bit check and see whether. So what you do, guys, you go through the question and see cash purchase is there. It's very rare. If it's not there, 0. Then open up a trade payable control account and, guys, try to find the credit purchases. Add both your answers together. Then you will have your cash purchase answer. That's how, guys, we normally do it. Okay, right. Let me check on that answer what you sent. I think should be okay. Let's see. Okay, now guys, remember in this question, when we go through and see, there is nothing called a cash purchase. Now, this is cash received from customer. That's something else. That's cash received from trade receivable. Cash paid to supplier. Right. That's also, guys, not there. Okay. So, okay. Right. This answer, also, let me check. So, you all have given, guys, for me two different answers. Let's check and see. So, once again, guys, like I'm saying, cash received from customers or cash paid to suppliers is not cash purchases. Cash paid to suppliers means, guys, cash paid to trade payable, not cash purchase. If it's cash purchase, they will tell it's a cash purchase. So therefore, guys, in my question, cash purchases are 0. It's not given. Normally, now here, guys, when I say given, it means that they would have given it in the question. It's not a guarantee. If there is cash purchase, they will tell cash purchasers, but in my question, it's not there. Now open the trade payable control account. Receivable first, no need. It's given to confuse you all. Trade payable first, that's, guys, opening balance. Trade payable opening balance will go to the credit side, 60,000 rupees. Next one, guys, cash received from customer. That should go to trade receivable. Cash paid to suppliers, yes, guys, mark it over here. Cash paid to suppliers, 302,800. Discount received. Normally, guys, discount received will come to the debit side, 2960. Contra means, guys, set off. Set off, guys, normally comes to the debit side of the control account, 2000. Trade receivable on 30th of June. Guys, trade receivable on 30th means at the end. That we don't take. Okay, trade receivable at the end, we don't take. Trade payable on 30th of June. Yes, that has to be taken, guys, over here. That's the carry down, 84,000. Right, now, guys, close the account and see what's going to be the total. So the total, guys, will be this way. 302,800 plus 2960 plus 2000 plus 2960 plus 2000 plus 84,000. Where, guys, the answer will be 697,520. Bring the same answer, guys, on. No, I think something went wrong with my calculation. 302,800 plus 2,960 plus 2000 plus 84,000. Here, guys, 391,760. Same thing, guys, will go here also. 391,760. Okay. Now, guys, then deduct these two and check and see, guys, what's going to be the credit purchase. Minus 60,000. So 331,760 is what I'm getting. Let's put that answer and see, guys, over here. 331,760. Yeah, that's the correct answer, guys. Okay, so this is how you have to find your answer. Right, so just check and let me know, guys, if there is any doubts that you want to clarify, just ask me, I will explain. Okay. And you can copy the working, guys, whatever that you need, and we'll move to the next question. Now, guys, over here also, they're asking you to do the exact same thing, actually, because, guys, see, Kirk's opening balance of trade payable control account. During the year, he made a credit purchase and return. So they are asking, when preparing his trial balance, what amount should Kirk include for trade payable? So normally, guys, you should understand, in a trial balance, what do we normally show? Account balance. Account balance means what? Carry it down. Okay, so they are asking, in the trial balance, how much will you show trade payable? In simple words, in the trade payable account, they are asking you to find the carried down. The carried down is going to be the correct answer. Like, easy question, guys. Can you quickly find the answer for me for this one, guys, faster? Okay, 42,594, option number one, no? Right, okay. So guys, let me also quickly work out that question for you. It's an easy one. So you can just look at this format, guys, what I have given here, same thing only. So opening balance, guys, should go to the credit side, 32,978. Credit purchases, that guys should come to the credit side, 178,509. Return. So normally, guys, remember when you return, it should go to debit. Now see, if you're buying its credit means return, guys, should go to debit side, 4,945. And payments to suppliers, guys, here can you see payments means cash paid, 163,948. Okay, now guys, close the account and find the carried down. That's all, guys, what you should do. So therefore, guys, the answer will be 32,978 plus 178,509 minus 4,945 minus 163,948. Yeah, correct answer is, guys, 42,594. Right. Okay, that's the correct answer. So just prepare a basic control account and, guys, find the carried down. That was the requirement. Okay, right. Then, guys, let's go to the next question then. So if you want to keep at this screen, just let me know, guys. If not, I'll just move to the next page. Right. So kind of a tough question, guys, what we are facing over here. So this is coming from this chapter called accruals and prepayments, underpaid expenses, overpaid expenses. So it's coming from that particular chapter, guys. So can you little bit read and see? We'll see whether we can tackle this question. Let's see what they're telling. So just keep in mind, guys, your question is finishing on December 2005. Just keep in mind that and do it. Hmm. Getting second one, no? Right. Let's check that and see. Hmm. Third one. Okay. So guys, now let me explain to you how to do this particular question. Little bit of a tough question. On 1st of January 2000X5, the company made a loan. Now, this is the tricky part, guys. Company didn't take a loan. They made a loan to an employee repayable on 1st. So, on the 1st of January, they gave a loan asking the employee to pay back in next January. So, within 12 months. So, it becomes a current. Now, guys, think. We made a loan. If we made a loan means, is it an asset or a liability, guys? If we make a loan, it will become a asset. Okay, we are not taking a loan, no, guys. We made a loan. So therefore, under current asset, let me guys mark it over here. Current asset, the loan that we made is 12,000. We didn't take a loan, guys. We gave a loan. Charging interest at 2% that year. Okay, charging interest at 2%. On the due day, she paid the loan and the whole interest. Now, guys, understand, she paid the interest on the due date means she paid the interest in 2006. Now, our question is for December 2005. No, so at that date, it was interest receivable. Do you understand that part? In 2006, guys, she paid the money. But in 2005 December, has she paid? No. Then that interest will become interest receivable. That is also current asset, guys, over here. Interest receivable 240. How 240, guys? 12,000 into 2%, right? Can you guys little bit check and see, guys, do you have any doubts on that question, what I have done so far? It will be check and see, guys. First paragraph, if you're having a doubt on the two numbers, please ask me. Right, now, guys, let me move to the second one. Right. Now, second one, they are telling the company paid annual insurance covering 12 months until 31st of August. Okay, that means, guys, see, 31st of August, until that they have covered, no, 2006. That means 12 months, no. So 12 months when I take, it will start on 1st of September 2005. Are you okay with that part? If the 12 months is finishing in August, it has to start in September. Then only, guys, September to August, there are 12 months. But guys, understand, from September 2005, our question is finishing in December 2005, no? Okay, so we have paid extra. Can you see? September, October, November, December. Until that part, what we have paid is okay. But we have paid after December. So when you pay after December, or if you pay after the accounting timeline, what do we call it? Prepaid expenses. That means, guys, see, 9,000 we have paid for 12 months, no? So how many months have we paid extra? We have paid 8 months extra. How 8 months extra, guys? See, September, October, November, December. So that is under the timeline, no problem. So 4 months is under the timeline means the rest of the 8 months we have overpaid. So therefore, guys, when you overpay, we consider it as a prepayment. Check and see, guys, how much is the overpayment? 9,000 divided by 12, that into 8, 6,000 rupees, guys, we have overpaid over there, right? Prepaid expense, 6,000. Guys, if you're having any doubts, please ask me. Right, third one. In January, the company received a rent of 4,000 covering 6 months until 31st of December 2005. See, guys, the rent which was due in December 2005, person is giving us in January only. So in December, we didn't get this. In January only we got. So in December, if we have to get means, what is that? This is income receivable, rent receivable. Rent receivable is also, guys, a current asset. Rent receivable, 4,000. So therefore, guys, now when we add everything, the correct answer or the correct option, guys, will become this one. Right. Here, guys, loan 12,000, interest 240, prepayment and 4,000. When you add everything, this should be, guys, the correct answer. Current assets 22,240. Current liability, nothing. No current liabilities in this question. The only thing, guys, this tricky part is the first paragraph where you have to see company made a loan. So company, guys, making a loan means it becomes an asset for us. Right, please go through this part and see, guys, any doubts that you have, you can ask me. I'll clarify and go to the next question. Okay. Now, guys, what we will do is, guys, we'll go for a short break and then we will resume the class. So what we'll do, guys, I think as a doubt, wait, the first point. No, yeah, sure. I will explain that after we'll go for the break, guys. Yeah. So the first part is like this. On January, company made a loan. No, company made a loan means company money they gave for a worker. So company money when they give for a worker, it's an asset. Now, normally, if we take a loan, no, it's a liability. Now, we are always the company. If the company takes a loan, it's a liability. But here, company made a loan. That means company giving a loan to someone. So it's an asset. So why we are considering it as current asset is because January 2005, January 2006, there is 12 months. So if it's an asset within 12 months, we call it current asset. No, that's why over here, I consider that as a current asset loan 12,000. Done. Then once you're done with that part, the loan 12,000, now you have to calculate the interest. So 2% when I see for 12,000, answer is 240. Now that 2% interest we got in January 2006. That time only he gave the money to the hand. So in December, we didn't get that interest. No, we got the interest in January. So at December, it was interest receivable. Interest receivable is also a current asset. That's why I have taken that also inside current asset. We make a loan, so it's an asset. Interest is then income for us, but still we didn't get in at December. We didn't get. We got it in January, not at December. So as at December, it was interest receivable. So because interest receivable only, I have taken it as an asset. Little bit check and see, are you okay with that part now? Okay, right. So guys, the other students, we can go for a short 20-minute break and let's come back, guys, at 7:50. Just check and let me know, were you okay with that? If not, after the break, I'll try to explain it one more time, just that you're okay with it. Okay, right. So guys, let's go for the break and come back in 20 minutes. Okay. Okay, right. So guys, let's resume this paper then after the break. Can I guys little bit try this question guys over here? Just attempt this and see. So they're asking there's an error that has taken place. After correcting the error, what's going to be the profit? Okay, let me check that answer. Okay, right now guys, how to do this question? Now starting itself guys, they have given you a profit of 83,600. Right. Now, 18,000 paid for a vehicle has been taken to motor vehicle expenses account. So you have to correct that mistake. So what happened, guys? If you buy a vehicle, if it has been debited to the expense account, what should happen? Motor vehicle expense account should become credit 18,000. And you bought a vehicle now, guys. So motor vehicle will become debit by 18,000. This is the answer. Okay. If you buy a vehicle account should become debit. Accidentally, it has been debited to expense. So when you debit to expense account guys should become credit. Okay, so that's your answer. And now they are telling it is the company policy to depreciate vehicles by 25% using straight line method. Now that you have a vehicle in hand, you should charge guys 25% on this vehicle. So when you charge for 18,000 guys, 25%, what's the answer that we are getting? 18,000, when we see 25% guys, answer is 4,500. So what's the double entry for depreciation guys in accounting? Depreciation account debit 4,500. Provision account credit by 4,500. So these are the two double entries that you have to set for the question. Now guys, don't forget the ultimate part of the question. Now guys, what's the ultimate part of the question? Which one, guys? 1 minute. It was later found that the purchase of a motor vehicle. Yeah, it's a non-current asset. Okay. Since the vehicle is a non-current asset, we are going to depreciate. No. Over here, you can go depreciation debit, non-current asset account credit. That also correct. Or you can go like the normal way. Depreciation debit, provision account credit. Now, usually we go depreciation debit and provision credit. Only if the question specifically says non-current assets are held at carrying value, then we go depreciation debit and non-current asset account credit. Okay. But here, if you go in that also, you won't go wrong. Right. Anyway, guys, coming back to the question, profit. So normally, guys, profit is affected by income and expenses. So from this four, you select now income and expense. This is an expense, so I should select this. This is an asset, don't take. Depreciation is an expense, so we should take this. Provision is an asset, so we don't take. Always remember, guys, when there are errors, first you correct them. Because the question is asking about profit, normally, guys, how do we do profit correction? Step 1, out of your entries, select only income and expense. That's step 1. What is step 2? It's like this. If it's credit, your profit is going to increase. Okay. Likewise, if it is debit, then your profit is going to reduce. Right now, guys, look at this part for an example. Now, motor vehicle we selected. Now, motor vehicle expense we selected. Now, look at the side. Credit. Credit means profit is going to improve. So over here, guys, we have 18,000 positive. Right. Then, guys, on the other hand, look at this one, guys, over here. Depreciation, debit. Debit means profit is going to reduce. So therefore, guys, you subtract 4,500. Right now, guys, you get your answer. Check and see how much is it going to be. 83,600 plus 18,000 minus 4,500. So therefore, guys, the correct answer is going to be 97,100 for the corrected profit. This is the answer. Right. Yeah, I think one student sent me the correct answer long time back. Good. This is the answer. But just check and see, guys, anything that you want me to re-explain or clarify, please ask me. If not, guys, we can go to the next question. Yes. Which one you're asking by? Is it a non-current asset? Which one? Okay, so it's like this. Assuming that the organization is a vehicle selling business. Okay. Now, in this question, if they have paid for the purchase of a motor vehicle, that means it's a non-current asset. This 18,000, we consider it as an expense. Now, this 18,000, they're telling the word purchase. No, maybe that's what's confusing. 18,000 will be considered as a purchase or an expense if our motor vehicle, if we are doing a vehicle business. Now, if I am doing a vehicle business, then I buy and sell vehicles. No. So vehicles will become my inventory. Only in that case, the purchase of a vehicle will be considered as a purchase expense. Unless they say our business is a vehicle business, then motor vehicles that we buy will always be considered as a non-current asset. Okay. Unless the paper says we are a vehicle trading business, if you buy vehicles, it's always considered as a non-current asset. But if we were a vehicle trading business, then this will become an expense. This is also an expense. Right, just check and see whether you're okay with the doubt that you had, whether I was able to clarify. Okay. Right. Now, guys, we'll go to this question, guys, over here, which is on accounting ratios. Okay. So guys, it's ratio question. What is happening over here? What is the correct answer? Okay, right. Let's discuss that and see, guys. Now see, now guys, when you take a look at our ratio, you have to guys always compare ratios from this way to this way, meaning brought forward to carry it down. Now current ratio guys, 1.5 has become 1.2. So normally guys, current ratio, what does it mean? Our liquidity position. How can we settle our debt? What's our capability? So guys, our capability of settling debt has reduced. Okay, because it has dropped down. Receivable days have increased. What does that mean? Receivable days means how many days do our customers take to pay money? Okay, how many days do our customers take to pay money? So this one guys from 50 days has gone up to 75 days, meaning our customers are now taking a longer period of time to pay money. Payable days, 45 has become 30. So 45 has become 30 means guys, payable days means how many days we are taking to settle our supplier. It has gone down. That means we are settling them faster. Okay. Supplier days are gone down means we are able to settle our supply faster than last year. Inventory turnover days has increased. That means our stock is taking more time to sell. Okay. Inventory turnover guys, 35 became 42. No, 35 has become 42 means we are taking a bigger time period to sell our stock. So the correct statement guys out of all these should be second one guys should become the correct answer. X is taking longer to pay suppliers. No guys, supplier days has fallen. No, so we are taking a shorter time period. Liquidity and working capital has improved. No guys, everything has gone to us. X is receiving cash faster from customers. No guys, earlier we got it in 50 days. Now we are getting in 75 days means we are taking a longer time period to collect money from customers, not short time period. So therefore guys, answer has to be option 2. So always guys, when you compare, go from 2008 to 2009 or maybe from starting year to the ending year. Okay, don't go the other way around. Right. So that's the answer guys for second one. Okay, right. Can you guys little bit try to pick up the answer guys, this one? So this is based on cash flow, the one that we spoke today. Okay, right. Let's discuss, guys, the answer for this cash flow statement. Right. Let me check your answer. Okay. Mm, okay. Right. Mm, right. All right, guys. So two people, guys, sent me the answer. Few small mistakes are there. We'll discuss them and see. Right, no problem. Right. So, guys, first one, a statement of cash flow using the direct method produces a different answer for operating activities than indirect method. Guys, listen. Whether we are doing indirect method or whether we are doing direct method, operating activity, though the format is completely different, the answer what you get has to be the same. Understood, guys? Whether you are doing direct method or indirect method, operating activity, final answer has to be the same. So it's not different, so it's false. Right issue do not come in cash flow statement. That's false. Guys, what's a right issue? A right issue is where you're giving shares at a discounted price. 5 rupees share you're giving for 3 rupees. So if you give for 3 rupees, you're getting 3 rupees. No, guys, you get money. So therefore, this is false. It does come in the cash flow statement under financing activity. What doesn't come is capitalization of reserves, bonus issue. That only will not come in the cash flow. Next one. A surplus on revaluation of non-current assets will not appear. That's true because, guys, when you revalue your property, no money comes. Okay, it's a non-cash item. So therefore, guys, that will not appear in the cash flow statement. A profit on sale of non-current assets will come under investing activity. No, guys, profit on sale will come under adjustments. Okay, now you should not confuse the two. When you sell, you will get money, no? Proceeds from the sale. That is part of investing activity. That's true. But the profit on the sale of non-current assets, guys, is a part of the adjustments, not part of the investing activity. So therefore, guys, that will become false. Okay. So this is your answer, guys, for this particular question. Right. Just check on them, guys, quickly. We'll move to the next one. Right. Now, guys, this question, what you should do is, guys, you have to open a rent T account. And once you open a rent T account, guys, you should find the missing figure. Okay. That's what, guys, supposed to happen. You have to open a rent T account and you have to find the missing figure. Right. Just check and see, guys, these also accrual and prepayment. Yeah. So guys, both students are getting the same answer. Very good, guys. That has to be the correct one. So let me quickly do and show it to you. So you have to guys quickly open the T account called rent income. Right. So the company receives rent, the total receipts. So normally, guys, you receive using cash. So when you receive, cash comes in. Cash account debit, rent account will become credit, 481,200. Right now, guys, you have to just mark these balances. One is 2005, one is 2006. So always, guys, 2005 is brought forward, 2006 is carried down. Or maybe just look at the year. Rent received in advance. Guys, when you receive rent in advance, we call it a liability. So normally, guys, liability, how does it work? Brought forward will come on credit side, carried down will come on debit side. So once again, guys, rent received in advance is what? A liability. So liability means brought forward is credit. Carried down, guys, will become debit. Then, guys, rent in arrears. When you get rent in arrears, you consider it as an asset, rent receivable. So therefore, guys, brought forward is debit side, carried down is credit side. Right now, guys, last part, what you should do is a very simple thing. Close the account, find the answer that's going to come over here. So most students are saying the answer is option 2. Right? So therefore, guys, that's the correct one. So once you close the account, the missing figure, what you find over here. Okay. Right. So it's a straightforward question, guys, not that difficult. So you just need to know how assets and liabilities actually operate for us to get that answer. Okay, right. Then guys, let's go to the next one then. Okay, a little bit try and see that this question is a little bit of a tricky one. Normally theory questions are always tricky when compared to the numbers. Yeah, that's correct. Good. The answer what you sent is correct. Okay, that option is correct. Good. So they're asking two reasons, guys. Right. So when you look at the question, what is the difference between a sole trader? Yes, that's the correct answer. There you go. Right. So a sole trader's financial statements are private, while the public company financial statements are sent to shareholders and may be publicly filed. That's true, guys. For a sole trader, the financial statements don't need to be published, so he can keep it for himself. Whereas if it's a company, guys, you have to prepare financial statements and send it to shareholders. And if you are public limited company, then you have to show it separately. So therefore, guys, this is correct. Only companies have capital invested in the business. That's wrong, guys. Sole trader has capital invested. Partnerships have capital invested. They all have capital. A sole trader is fully and personally liable for any losses the business can take. Yes, whether it's a liability or maybe whether it's a loss, he has to bear it fully. Unlimited liability, unlike the companies. Revaluation can be carried out in company, but not for sole trader, guys. There is no specific rule that way. So therefore, 1 and 3 are the correct answers. Okay, right. So guys, again, another one question, guys, that has come based on ratios, right? Just check and see, guys, this one. Very good, guys. Both have sent me the correct answer. So the fourth one, guys, should be the correct one, right? So which is the following statement is true? Interpretation is only used for potential investors. No, guys. Analysis of ratios is not only used by investors, it's used by existing shareholders, employees, competitors. Many people, guys, will use accounting ratios. Ratios based on historical data can predict the future. These guys, one of the drawbacks of ratios. Ratios are only focused on historic information. No? Based on this 100%, we can't tell how the future of the company is going to be. That's wrong. An entity's management will not assess an entity's performance using financial ratios. That's wrong, guys. We do see how well we have performed using ratios. So therefore, answer is the fourth one. Right. Guys, this question, I don't know why even they have given in the exam such an easy question. Right? Can you guys quickly answer this one? I don't know why they test like this also. Yeah, no, guys, straightforward question. No, what they're asking, guys, what is the opening balance in the motor vehicle account for July 2006? Now, this is for June 2006. No, guys, they're asking next time what's the brought forward. So, guys, normally carried down. No, guys, we take it to the other side as brought forward. So, therefore, 36,750 will come on the debit side. It's a very simple question, but they have asked. Done. See, that's why I said you guys, such a basic question they have asked in the exam. Let's move to the next one, guys, then. Right, so this is a little bit of a tough one, guys. Under intangible assets, what they have asked, just check and see whether you can do because tricky. Okay, so guys, this particular question is coming from this area called, guys, disclosure notes, right? So usually, guys, what you have to list down during disclosure would be number one, if there are any impairment losses, guys, we have to show that one. Then on the other hand, a list of intangible assets purchased and developed during the period. Also, guys, you have to show the useful life of the assets. Yeah, these are the two correct answers. So this one, guys, all what you should do is there's an area called after every chapter of an accounting standard, guys, there's an area called disclosure, no, guys. So you just have to go through that part only to pick up this answer. Right, let's move to the next one, guys, then. Okay, this one is easy, guys. This one, I don't think you will go wrong, right? Just check this and see, guys, again from the same chapter only, intangible assets. Right, guys. I think both of you are telling the answer is 3, and I think that has to be, guys, the correct answer. Number 1, capitalized expenditure must be amortized over a period not exceeding 5 years. Guys, there's nothing like that. When it comes to capitalizing or when you're charging amortizing, there is no set limit as 5 years. It can be any number of years. It can even be actually infinity, but for infinity, we don't go amortization. But it doesn't have to be 5 years. Capitalized development cost is shown under non-current assets. That's true, guys. Normally, when something is considered as a capitalized development cost, we consider it as an intangible asset. So we show in between non-current and current assets. All research expenditure must be considered as an intangible asset. That's wrong. Normally, guys, research expense is not an asset. We consider it as an expense, not an asset. So therefore, guys, only the correct answer is going to be option 2. Only that. Right. Then, guys, let's go to the next one. Okay, so once again, guys, another one question from accrual and prepayment. You have to prepare the T account and find the missing figure. Right. Just try this one, guys. Okay. Right now, guys, how to get the answer for this particular question? Yeah, both of you are getting the correct same answer, guys. So it has to be correct. So others, you quickly, guys, draw a T account and label it as rent. So number 1, or maybe electricity. Okay, we start off with prepayment. So normally, guys, prepayment is what? Asset. So brought forward of an asset is always debit, 550. Cash paid, normally, guys, in an expense account, the cash component is always debit. Accrual carried forward. Now, don't get confused, guys, with this part. What they're telling is like this. Once you close the account, next time accrued carried forward. So accrual is a liability, no? So liability means carried forward will be on the credit side. Brought forward 650. So guys, understand, if the brought forward is 650 means carried down will come on this side, 650. Okay, shift it to this side. Okay. Now, guys, close the account. 5,500 plus 504. Wait, guys. Wait. Okay. Then in that case, 550 plus 5,400 plus 650, guys. The missing answer I am getting as, guys, 6,600. Okay, the missing figure. So therefore, guys, this should be the correct answer. So I think the catch of the question is that this one, guys, the accrual. So accrual carried forward means brought forward onto the next side is 650, meaning next time there will be a liability brought forward. So that means this time it's debit carried down. So once you close the account, guys, 6,600 is the correct answer. Right. I think the down part only the little bit tough one. Okay, right. Then guys, let's move to the next question. Okay, so guys, this question is coming from irrecoverable debts. Okay, so now they're asking what figure should appear in the statement of profit and loss. Now, normally guys, in this lesson, to the profit and loss account, we take two things. One, irrecoverable debt. Okay. The other one, increase or decrease in allowance for irrecoverable debt. So from this chapter, guys, these are the two things that we normally take inside profit and loss account: irrecoverable debt and increase or decrease in the provision for irrecoverable debt. Can you guys give an attempt for this question? Then I will explain you the whole thing quickly. Okay, let me check that one. Okay, right. Now, guys, now let me do this question and show it to you. Now, first of all, guys, to do this question, it's better if you have a small T account for allowance for irrecoverable debt, right? Okay, allowance for irrecoverable debt. Okay, let's start. So, guys, first one, on June 2005, on June 2005, a company's allowance for irrecoverable debt was 39,000. Okay, in June 2005, a company's allowance for irrecoverable debt was 3,900. Okay. So guys, see, company already has an allowance. So normally, guys, in accounting, allowance brought forward is always credit side. Brought forward 39,000. At 30th of June 2006, trade receivables total to 570. it was decided to write off 37,000 as irrecoverable debt. So first, guys, that irrecoverable debt of 37,000 is an expense. Now, normally, guys, in the allowance account, after you get the brought forward, second thing, guys, what you should do is get the carried down. How to get the carried down in the allowance account? This is the equation. Trade receivable minus irrecoverable debt, and that into a percentage. Okay. Trade receivable minus irrecoverable debt, and that into a percentage. So guys, in our question, trade receivable is how much? 517,000. Okay. Irrecoverable debt is 37,000. That into 5%. Right. 517,000 minus 37,000 into 5%. So therefore, guys, I'm getting 24,000 as the answer. Right. Okay. Now, guys, what you do, you have to now close the account. Okay. Now you have to close the account. And once you close the account, guys, what's going to happen? 39,000 on this side. 39,000 on this side. 39,000 minus 24,000. Income statement is 15,000. So guys, just remember one thing. If the 15,000 is coming on the debit side, that means it's a reduction in allowance. Got it? That means, guys, how do we know whether it's an increase or decrease? Guys, just look at the balances. You started with 39. 39,000 ended at 24. 39 became 24 means it has reduced. It has reduced by 15,000. That's why, guys, we call it a decrease. And guys, remember, if it's a decrease, our expenses will reduce. So therefore, guys, what's going to happen? 37 minus 15. The answer, I think, is going to be, if I'm not wrong, 30 minus, it will become, guys, 22,000 should be the correct answer. Yeah, that's the correct answer. Right. Can you guys then copy this down and guys check and let me know, guys, for any clarification that you want to make? Okay. Right. Then guys, let's move to the next question. Okay. So guys, this is related to depreciation and revaluation. Like little bit have a try at this question, guys, over here, depreciation and revaluation. Okay, now guys, in this question, what they're asking from you is the revaluation gain, no guys? Okay, now normally guys, how do we calculate revaluation gain in accounting? It will be this way. Revaluation gain is usually, right, cost of the asset minus accumulated depreciation, that will be guys equal to carrying value. Carrying value we should compare to market value. Right. Now the cost of my asset is 200,000. Right. Accumulated depreciation. Now, usually guys in accounting, how to calculate accumulated depreciation using the straight line method like this. Get the depreciation first. Now, you know how to calculate basic depreciation, right? Okay, so take the basic depreciation and multiply guys this one by number of years used. This is what you should do. Okay. Take the depreciation, multiply it by number of years used. So the depreciation, guys, for my question is 10,000. How did I get 10,000 here, guys? See, they bought a building for 200,000. No? Useful life is 20 years. No? So 200,000 divided by 20. Got it? 200,000 divided by 20. The answer is 10,000. Okay, that's how I got. Multiply this one by number of years used. So guys, see how many years you have used. You bought this in 2001. So 2001, 2002, 2003, 2004. Can't take 2005 because 2005 beginning itself, they have revalued, no guys. So 4 years, 2001, 2, 3, and 4. So multiply by 4. So therefore, guys, accumulated depreciation is 40,000. So therefore, guys, carrying value will be 160,000. When we compare to my market value is 340,000. So therefore, guys, 160 became 340 in the sense, guys, it has gone up by how much? 160 minus 340. Answer is, guys, 180,000. There is an increase. Right, very good, guys. Both of you have sent me the answers. Good, 180,000, guys, should be the correct answer. That's it. Okay, right. Then guys, let's go to the next question. Right. Can you guys little bit try and see, guys, is from IAS 2 accounting for inventories. They're asking two things that we include as cost of inventory. Okay, so guys, under manufacturing, if you're a manufacturing company, guys, what are the two things that you will consider as cost of inventory? It's going to be, yeah, very good. Those are the two correct answers. So normally, guys, general admin. Now, if you're a manufacturing company, guys, administration cost is part of the income statement. No, so you can't take it as a cost. Depreciation of factory machine, yes, it's an overhead, so it's a manufacturing cost. Carriage outward, no, guys, carriage outward is a distribution expense. We can't take that. Carriage inward, yes, it's part of the manufacturing account. So these should be the correct answer. Okay. So guys, and this part is done. Let's go to the next one. Okay. So guys, this is also a question, guys, that is coming from incomplete records. if I'm to give you a small hint from which specific area, this is guys coming from profit markup and profit margin, that lesson. Okay, markup margin guys, that one they're asking you to calculate gross profit. Right. Just try and see guys if you can. Okay, right. So let's quickly discuss this question then. She had an opening inventory of 6,700. Then guys, purchases 84,000. And then guys, over here at the end, as closing stock, she had 5,400. Meaning guys, in our question, the cost of sale is going to be 6,700 plus 84,000 minus 5,400. Meaning guys, the answer is 85,300. That's the cost of sale. Now they're asking gross profit no guys. So normally how does it work in accounting? Profit is equal to selling price minus cost. Now guys, if the business is using a markup, then the profit is 20%. Understood guys? If the business is using a markup, profit is always 20%. Sorry, if the business is using a markup, 20% means that's a profit. And if we are using markup, guys, we always assume cost to be the 100% factor. Okay. So now, guys, in our question, this cost is what we call, guys, cost of sale. So therefore, guys, now do a simple math calculation. 85,300 is equal to 100%. Now guys, can you see here? 85,300 is equal to 100%. So divide by 100% and multiply by 20. So therefore, guys, I'm getting the profit as 17,060. Okay, so I'm getting this profit as 17,060, guys. This has to be the correct answer. They are asking the gross profit now, guys, right? This should be the correct answer. Yeah, correct. Right. Okay, so guys, then just copy down the working, guys, for this question. This is how it's supposed to be done. Wait, guys, I'll just show you the working over here. Yeah, if you want, you can calculate the sales also, but in this case, the profit is the gross profit. Okay, the profit what we are considering, guys, is the gross profit over there. Okay, right. So guys, then with that one, then guys, then I'll conclude then the today's session as well as the TRG program for revision. So guys, I think we have discussed 20 MCQs from this exam paper. Don't worry about section B because we have already done in class. Just guys, if you have enough time, just go through the remaining 15 MCQs that is there on this paper, guys. That's it. Okay. Right. All right, guys, then welcome then. I'll see. Okay. And good luck for your exams. Yeah, that student who had that doubt. No, that 6,700 is opening stock. Okay. 85,300 is cost of sale. No, 6,700 is not sales. 6,700 is opening stock. Okay. That's not sales. It's opening stock. Right. All right, guys, and welcome then. And again, good luck for your exams. Okay.